Meet Atif and Kamran. One fine day at work, Atif came across an investing scheme named mutual funds. It occurred to him Kamran invested in mutual funds a while back. He thought of getting some information out of him. He went over to Kamran's desk, and this is how the conversation went on between them.
Hey Kamran, if I am not wrong, you invested in mutual funds some weeks ago. I remember you mentioning it.
Hello, Atif. Yes, you are right, I did.
Since you are well aware of the whole investment protocol, can you give me some guidance over it? I am also thinking to invest in mutual funds.
Wow, that's great. I am glad you're making a right move. Let me tell you what mutual funds are. Mutual fund is an investment vehicle that is made up of a collection of funds from different investors for the purpose of investing in securities such as bonds, stock market, money market instruments and similar assets. There are two types. Open-end funds control the mutual funds marketplace in terms of volume, continually creating new units or cashing in issued units on demand. Closed-end funds are sold at a fixed number of shares and are launched through an IPO, initial public offering. Once issued, they can be bought and sold at market rates in the secondary market, stock exchange. Mutual funds, according to investment objectives, are these: equity fund, which invest in stocks. Balanced fund, invest in equities and fixed income securities. Money market fund, invest in government bonds and certificates of deposit. Income fund, generally invest in money market securities, term finance certificates or SCUs, commercial paper, and spread transactions. Asset allocation fund, invest its assets in any type of securities with a provision to diversify its assets. Capital protected fund places a major portion of the net amount in a bank in the form of a term deposit, while the remaining is invested in accordance with the authorized investments. Index tracker fund is programmed to carry out the activities of a certain specific index. Fund of funds fund follows an investment strategy of holding other mutual funds in its portfolio rather than investing directly in shares, bonds or other securities. Sharia compliant Islamic fund means a joint pool, wherein the investors contribute their money for the purpose of investment to earn halal profits in strict conformity with the precepts of Islamic Sharia. Mutual funds differ in terms of investment objectives, strategies, risks and costs. When choosing a mutual fund, consider the following factors. Risk profile. Your mutual fund's risk profile should align with the level of risk you're willing to take as an investor. Fees and expenses. The fees and costs are the biggest problem with mutual funds. These costs eat into your return, and they are the main reason why the majority of funds end up with subpar performance. Investment objective. Think about why you are investing. Identifying a goal is important because it will help you sharpen up on the right fund for the task. Past performance of the AMCR fund. As with all investments, investors should always research an AMCR fund's past results before making their move.
I see. Can you tell me the benefits of investing in mutual funds?
Sure, I was just coming to that. Pros of investing in mutual funds are: professional management. A money manager takes care of your mutual fund needs. Diversification. Assets of a mutual fund, spread across a range of companies, minimizes the risk of loss. Affordability. Easy to afford. Liquidity. Liquidity allows redeeming of funds invested. Dividends. Reinvestment. The nature of the funds allows reinvestment of dividends. Cons of investing in mutual funds are: lack of control, price uncertainty, high expense ratio and sales charge, tax inefficiency and poor trade execution. Risk associated with investing in mutual funds are: market risk, refers to general economic and market conditions, regional or global economic instability, or currency and interest rate fluctuations. Credit risk where the counterparty is unable to meet its obligation in full on time, such as financial or legal obligation. Interest rate risk, where an investment's value changes due to a change in the absolute level of interest rates. Liquidity risk, where lack of marketability of an investment arises that cannot be quickly bought or sold to convert in cash without loss. Government regulation risk, a change in laws or regulations made by the government or a regulatory body. How to invest in mutual funds? Check the SCSCP website for list of AMCs regulated by SCSCP. Contact asset management companies, AMC, or their authorized agents. Make a decision based on your risk profile. Read the offering document thoroughly. Open an account with a mutual fund company. Purchase funds and their subscription. Redeem funds to sell units. Also, ensure that investment in mutual funds is done in any one of the licensed entities registered with the Securities and Exchange Commission of Pakistan.
Why is documentation necessary?
To safeguard the mutual funds industry from anti-money laundering activity. Documents required: details of the investor, proof of income, identification details, bank account details, payment details, check, demand draft, pay order, declaration, authenticity of the statements made by the investor in the proposal form. Questions to be asked while investing in mutual funds: what are my rights as a mutual fund unit holder? Receive periodical statements of accounts. Inspect the documents of the mutual funds specified in the offering document. Receive constitutive documents. Are returns from mutual funds taxable? Cash dividends received by investors are subject to 10% withholding tax. If mutual fund is wound up, what happens to money invested? In case of winding up of the fund, the assets are distributed among its unit holders in the proportion of investment in the fund. What is a fund manager report? This is a monthly report produced by an AMC, wherein information on composition and performance of mutual funds is presented. Fees and charges involved in mutual funds. Fees and charges to be paid by the investor. Front-end load: this load is charged to the investor upon purchase of units of the fund. Back-end load: this load is charged whenever an investor redeems his investment in the mutual fund. However, not all open-end funds charge back-end load. Contingent or deferred sales load: some open-end funds charge contingent or deferred sales load on redemption of investment. However, mutual funds progressively reduce the load if an investor holds his investment for a longer period of time. This load is only charged in case when there is no front-end load. Fees and charges to be paid by the fund. Management fee: this is a fee charged by the AMC for the management of the fund. Trustee fee: this is the fee charged by the trustee for the provision of trusteeship and other services for the fund's assets. Other fees: all expenses incurred in connection with formation and registration of open-end mutual funds. Steps taken by potential customers for safeguarding their interest. Pay attention to offering document. Double-check the asset management company and its distributor or agent. Keep records of documents. Know your servicing branch. Review statement of account and fund financial statements. Inform your nominee about the investment you have made. That's all there is to know about investing in mutual funds. I hope my explanation has not left any doubt in your mind.
Yes, thank you so much, Kamran. Now I am confident in taking control of my money. The discussion we had will help me a great deal in managing my finances wisely.
I am glad I could help.